What does the market need to make it go higher? Money. Say it again, money. Where's that money going to come from? Nobody knows. That's what we were saying a while ago. Now we have a pretty good idea. I did a video on Friday and I talked about a White Swan event. Actually, I mentioned two of them in the video. And someone commented on it. I'm not going to say who it was. And they were honest and they said, wow, that was the most boring video I've watched in a while. Well, I was sick. So I'm feeling much better now. So hopefully this will be a little more entertaining, but more importantly, it'll be informative. So obviously we need more money in the system, more liquidity. And if that comes in, it's going to push the markets higher. Everyone's been talking about in 2024, or I should say this is 2025, isn't it? Maybe I'm still not over my sickness. In 2025, the common theme has been the M2, which is valid and is still, there is more M2. I mean, M2 is going up and to the right. So more money, that's great. But there's a couple events which I didn't see happening or coming, and a lot of people probably didn't. So let's talk about the two on Friday, and then I'll talk about a new one that I just read a post I think is fascinating, a third one. If these could all push money into the system around the same time, that could be huge for the price of risky assets such as crypto. All right, I'm Brian, Big Dumb Animal. My disclaimer is don't do what I do. These are informational purposes only. You see here on the screen, this is what I always show, the entire market, 2021 high, 2025 high. Where do I think it's going? Well, ever since 2023, it's been going up and to the right, and it's had these correction phases here, and we're possibly in another. Maybe not. It could have been created because of that crazy dip on that Friday, but you can see the MACD maps them out, and you can also see the RSIs being overbought, and you can also see that the OBV is still pushing up and to the right. That's what we want to see. If we see these correction phases start to come on low volume, well, that's when we'll probably want to get out. But let's talk about the money in the system. So on Friday, I spoke about the fact that the majority of the wealth in the US, like 70% is people over 55. I'm not there yet, but I'm awfully close. And they have the least amount of crypto. So they're the demographic which holds the least amount of crypto, but they have the most amount of money. So of course, if they start putting money in crypto, well, that's going to be a tidal wave of cash, way more than those in their 40s, 30s, 20s, teens, etc. So we want to see that happen. But when was that going to happen? A month, 3 months, 6 months, 12 months? Well, there's a catalyst. The catalyst recently was the fact that the price of gold shot up. And because the price of gold shot up so fast, that a lot of these people, like myself and others, for some of their assets, they have money managers, financial planners, etc. And they typically look at a Venn diagram or a pie chart and they say, okay, based on your age, you're going to have this much or this percentage is going to be in stocks. They're a little riskier. This much will be in things like money market funds, treasuries, that sort of things. We'll have some in commodities like gold, etc. But we only want you to have 5% here, 10% there, 50% there, however it works out. So if gold shoots up incredibly fast, it outpaces everything else, then proportionally, it'll be a much larger percentage of your portfolio. So they look at it and they have to reallocate. They got to sell some gold and move it around. So people are saying, why is gold selling? Why is gold selling? Because it had to. It went up so high, people take profits, right? Hopefully you want to take profits. I want to take profits. That's why we're doing this. When something shoots up in price and then it starts to sell off, don't say, why is that happening? You know why it's happening, because they're taking profits. You should be doing the same thing. So the catalyst is that, 5 or 6 years ago, financial planners weren't talking about, hey, you should put money in crypto. Now they are. So a lot of these older people, when they've got these, I say older people, that older demographic that has all the money, the financial planners now have a piece of the pie carved out for crypto. They didn't have it before. Now they have it. Great. There's a percentage. How do we fill that percentage? Well, the catalyst was gold shot up. They sold off some gold. They had to spread the money around. So I firmly believe that when people say money is going to move from gold into crypto, that yes, some of that money will move into crypto. I just gave you the example why. So first it was, yeah, that demographic has the money, but who knows when they'll put it in? Well, now we know. Gold shot up. It had to go in. So it's probably being moved as we speak and will be flowing into crypto. That was the first one. The second one, which is somewhat of a white swan, but we kind of saw it coming, just no one really talks about it. Everyone talks about the Fed dropping rates. That's great. But what we really want is for quantitative tightening taking money out of the system to stop. They've been doing that for like 2 years or so, however long. The next thing they do is the funnest part of any job. It's called normalizing. If you don't know what it means do nothing. But it's a better word, right? You look around with your colleagues and you say, hey, what are we doing this week? We're doing nothing. No, I can't put that on my timesheet. What did we do this week? Oh, we normalized. Yeah, I'll put that on the timesheet. I normalized, which basically means they do nothing. So the Fed might just normalize for a while. Ultimately, we want QE, which is quantitative easing, which is put money into the system. Or, at the very least, we want the Fed chairman to say when these things will end and or start. So I believe we're going to hear on October 29th that not only have rates dropped, but also that they're going to stop quantitative tightening. And he may say when they think they'll begin easing. That would be huge. That's the second swan. So there's one more big white fat swan in the pond. Let's talk about the other swan event. And I say that because I used to live near this pond. And it actually had white swans in it. It was kind of funny. I used to walk my dogs around there and they would bark at the swans. These were huge swans. They did not care. Those dogs did not intimidate them. So what I saw was this gentleman's post. I'm going to zoom in here. Here's his name. Here's his @ symbol. It drives me crazy when people take other people's hard work and make it look like it's their own, like repost it. So I want you to see credit where credit is due. This guy's amazing. You might want to follow him. He's got a lot of great posts. I'll cut this short. It's a very long one. I'll put it down below, but you'll see. What he's pointing out here is that money market funds, MMFs, are at 7.2 trillion. Okay. Why do we care? Money market funds are for primarily older people. There are the safest things you can invest in, theoretically, and they have a yield. So when you get older, you don't want to lose any capital, but you do want a return, but you're not going into risky stuff. Because if I'm 70 years old and I lose 50 grand, I'm not going to make that back. I'm 70 years old. I just want to go fishing. I don't want to go back to work. But if you're 20 years old and you lose 50 grand, yeah, that stinks, but you probably have time to earn it back. So these types of investments are where you want to preserve your capital and get a yield. What he pointed out was when the Fed lowers rates, traditionally what happens, obviously the treasury rates. Oh, the one thing I forgot to mention was, so what's in the money market funds? Well, they're treasuries, things like certificates of deposit, but mainly treasuries. So when the rates come down, the Fed says rates are coming down again, then what happens is some of the money in these money market funds, because the rates are going to come down in the money market funds, because the treasuries that they purchase, particularly the short-term 13-week or what they call 3-month, they are going to come down. The yields are coming down. If you look at a chart, they are coming down. So when those yields come down, then some of that money leaves the money market funds and it goes somewhere else. Where does it go? Well, he shows here, I'm going to show you two things about this, which is very interesting. Look at this. In 1998, there was 1.3 trillion in money market funds. 2003, 2.1. 2009, 3.8. 2005, 7.4. You can see it here in the graph, how it's just gone exponentially up. Isn't that amazing that there was only 1.3 trillion in 1998? And here we are 27 years later, which isn't a long time, and we're at $7.4 trillion. So when they had significant rate cuts in 1998, the tech bubble ignited because all this cash was removed from money market funds and went elsewhere. 2003, housing mania began. Had 2.1 trillion in there. Fed cuts, housing mania. 2009, 3.8 trillion in there. Fed cuts, everything rallies 300%. These three events were phenomenal. Yet this one was like 1/5 of the amount of money we got now. This was like 1/3 of the amount of money. This was like a half of the amount of money. Now we have 7.4 trillion. Who knows where that money is going to go? Hopefully some into crypto and what the impact is going to be. He calls it a powder keg. And he goes through the math as to when depending upon how much the Fed cuts, it shows about how much money comes out of those money market funds and goes elsewhere. But here's what you're going to want to see. He did some math regarding, generally speaking, Bitcoin. He said, hey, if 5% rotates out, and by the way, that would be multiple Fed cuts, fairly significant. I think more like 1.5%, not just 0.25%, that sort of thing, but pretty significant. But 5% rotates out, it's about $370 billion. That could send Bitcoin to 280 to 350K. If 10% rotates out, 740 billion, it could send Bitcoin to 550 to 700. 15% Bitcoin to 1 million. So what's interesting is he's done the math here. And again, this was like the first thing when we talked about the fact that sure, this older demographic has money, but why would they move it into crypto? Well, the catalyst was gold shot up. They had to redistribute. So, okay, this demographic has a lot of money in money market funds. Well, and they might move it to crypto, but it needs a catalyst. What's the catalyst? The catalyst is the Fed rates come down. So if we have this other Fed rate cut and maybe another one coming up, that's going to draw more and more money out. And you can see when people are giving these numbers of what Bitcoin could go to, it's because of more money, obviously, coming into the system. So that's what I wanted to show you today. I thought this was fascinating. I wanted to give you the data behind why essentially these things would happen. In other words, why would that money come out and into the crypto space? And there's 3 reasons that hopefully it will happen. We've got the redistribution of capital due to the fact that gold shot up. We've got hopefully QT ending, even though most people just talk about the rate cut. And then one of the byproducts of a rate cut, which you can see here, is that the treasury rates come down, which means that money market fund rates come down, which means that money is pulled out of money market funds and chases other sources. In that case, they're hoping, as we all, it goes into crypto. So I hope that was the background. Hey, if you like the way I teach, I hope you appreciate it. Look down below. I have a crypto school. There'll be a link to it. I'm going to talk about it in a second. Just hit my page. I'd appreciate it. And hit play and see if it's something you might be interested in. I'm creating, and I have many courses, and I'm creating many more on exactly how to do various things in crypto. It's a complicated space. There's a lot to learn. I'm trying to teach it to everyone as fast as I can so that you can debank yourself. Get away from the banks. Control your money. Get rid of the middlemen. I really believe to secure your future, your financial future, you need to be in control of your money. Have a great day. Thanks for watching. Please listen to my crypto school. Love how I break things down? Then hop into my crypto school. You'll get step-by-step courses on everything: buying, selling, staking for yield, borrowing, lending, even going fully debanked. Plus, join lively crypto chats and catch my daily market updates. And lastly, if you just want to help support the channel, there's a join button just below this video.